Thursday, February 24th, 2022. That's a palindrome date, folks. 222. Members, today, welcome to the Senate Tax Committee. Today, we are going to talk about Senate File 3220, and that is the Department of Revenue Policy and Technical Bill. We have the department here who will go over what that bill entails. And we'll start with Joanna Baer. Joanna, welcome to the committee. Just introduce yourself, please, for the record.
Good morning, Madam Chair, members of the committee. My name is Joanna Baer, and I'm the Legislative Director for the Minnesota Department of Revenue. We first want to start by saying thank you, Chair Nelson, for authoring this bill. And we want to thank you and the committee for hearing Senate File 3220 today. We appreciate the opportunity to present. As many of you know, our mission at the department is working together to fund the future for all Minnesota. Together is the most important word in our mission because we cannot do our work without you or your staff. So thank you, Chair Nelson. You have a great team. We appreciate their expertise and value our working relationship that we do have with them.
Thank you, Ms. Barrett. I'll stop you just one moment. We do have a quorum, members, and I will move Senate File 3220. Ms. Barrett, please continue.
Thank you. Madam Chair, one of our key strategies to achieve our mission is to provide superior service by engaging in meaningful interaction with customers. During those interactions, we often hear or notice items in the tax code that could be clarified, updated, or corrected. Some of these items may seem relatively minor, but they are important to ensure we are providing customers with the information, education, and services they need to efficiently navigate Minnesota's tax opportunities and obligations. And at the department, the engagement and meaningful interaction does not end there. Prior to the bill being introduced, we share and ask for feedback on these proposals with stakeholders and others. We also make a commitment to continue working with stakeholders and others on these proposals throughout session. Madam Chair and members, the commitment also extends to you. If there are questions or issues that arise, we'd appreciate the opportunity to work with you to find solutions or answers to any questions you may have. Please feel free to reach out to me at any time. Again, thank you for this opportunity to present and discuss this bill. And before we get started, Madam Chair, I'm not sure if there's an amendment on this bill or not that we wanted to.
Yes, Ms. Barrett, I will offer that amendment now. Members, the amendment is the A22-0329. It deletes page 6, it deletes sections 3 and 4. This will put the bill in the shape of the provisions and modifications being presented by the DOR today. All those in favor signify by saying aye. 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 Opposed? Adopted. Yes, continue speaking to the bill as amended, please.
Okay. Well, thank you, Mr. Chair. At this time, I'll actually turn it over to my colleague, Margaret Reisdorf, who will go through Article 1.
Good morning, Chair Nelson, members of the committee. My name is Margaret Reisdorf, and I'm an attorney with the Minnesota Department of Revenue, and I work primarily in the area of individual income taxation. In Article 1, there are 2 sections that make technical clarifying amendments to 2 Minnesota statutes that were enacted last session. The first change is found on lines 2.1 through 2.22, and it amends the pass-through entity tax enacted last session to make clear that the law permits limited liability companies taxed as partnerships or corporations to be included in the definition of qualifying entity. This section is effective for taxable years beginning after December 31st, 2020, and is therefore retroactive to the enactment of the pass-through entity tax. The second change is found on lines 4.23 through 4.26. This change amends the partnership audit regime statutes enacted last session to conform to the federal partnership audit regime enacted in 2015. This change makes it clear that if a partnership is federally audited, and in that reviewed year, the partnership has elected to file and pay the pass-through entity tax, that the partnership must file an amended pass-through entity tax report and pay the additional amount that would have been due had the federal adjustments been reported properly as required. This section is effective for taxable years beginning after December 31st, 2020, and is again retroactive to the enactment of the partnership audit regime. That concludes Article 1, and I'm happy to answer any questions you might have.
Thank you, Ms. Reisdorf. Members, that seems pretty straightforward, but there may be some questions or comments. I don't see any at the table here and not seeing any hands digitally. We will move on then to, would it be Jim Jordan on our next section?
Yes,
Mr.
good morning.
Jordan.
Good
Welcome to
morning,
the
Chair
committee.
Nelson. Well, thank you. Good afternoon, Madam Chair, and good afternoon to the committee. My name is Jim Jordan, and I'm an attorney at the Department of Revenue that will be walking you through the special tax provisions in the policy and technical bill. My remarks will address the one remaining special tax provision in Article 2 and two special tax provisions in Article 3, which addresses police and fire state aid. After I'm finished, I'll hand it over to my colleague, Dexter Wilson, who will summarize the one sales tax provision in Article 2. So I'll start with Section 1 of Article 2, found at line 5.7. This provision realigns deadlines related to the department's job of annually establishing the debt service surcharge rate imposed on gasoline and related fuels. First, a little history. In 2008, the state issued bonds to investors to pay for improvements to interstates and highways. The state must pay off the debt on those bonds, obviously, and the state chose to fund those bondholder payments by imposing a surcharge that is added to the gasoline tax that all of us pay at the pump. For example, the current total per gallon tax rate for regular gasoline is 25 cents. When you add the current debt service surcharge rate of 3.5 cents per gallon to the underlying 25-cent rate, you get the total tax at the pump for regular gasoline, which is 28.5 cents per gallon. Now to why we're proposing this amendment. The department annually sets the surcharge rate based on MMB's annual petroleum debt service surcharge forecast, which forecasts how much the state owes bondholders. Prior to the 2021 session, MMB had to publish the debt forecast by March 1st. The department had a month until April 1st to use the MMB forecast to determine and publish the surcharge rate. In 2021, the legislature moved the annual deadline for MMB's publication of the forecast back 1 month from March 1st to April 1st, but did not make the corresponding change to the department's deadline for publishing the surcharge rate. So this amendment realigns the annual deadlines by also pushing back the department's debt service surcharge publication date by 1 month. And then you'll notice the amendment obviously removes some outdated language from the subdivision. So Section 2 of Article 2 is sales tax related and will later be addressed by my colleague Dexter Wilson. Sections 3 and 4, the amendment was just approved to delete those amendments from the bill, so we're not going to address sections 3 and 4. So now I'll turn to the two special tax related provisions found in Article 3, which addresses police and fire state aid. Specifically, I'll be addressing two very similar provisions in Article 3. The first, which addresses fire state aid, is Section 13 of Article 3 and is found at line 12.3. The second, which is a similar provision that addresses police state aid, is Section 20 of Article 3 and is found at line 17.1. This technical clarification is thanks to legislative staff, more specifically Senate staff. Two insurance premium tax credits, the film production credit and the Minnesota housing tax credit, were added during the 2021 session. Senate staff recommended the change I'm about to discuss during the 2021 session, but the legislative calendar just got too busy to get this done last year. So now to the proposed change. The premium tax chapter gives insurance companies 3 opportunities to take credits against premium tax that insurers would otherwise owe the state. The historic structure rehabilitation credit, which became effective in 2010, the film production credit, which was enacted in 2021, and the Minnesota housing tax credit, which was also enacted in 2021. All 3 of these premium tax credits have language in the insurance premium tax chapter that clarifies that even though the insurers receive credits against the premium tax, the credit does not affect the calculation of fire state aid and police state aid. In other words, current insurance premium tax language makes clear that when the department calculates the total amount of police and fire aid available to be apportioned to municipalities based on reported premium taxes paid by insurers, it should be based on premium taxes reported by insurers prior to the insurers taking any of the premium tax credits. The problem we're addressing with this amendment is that there's no parallel clarifying language in the 2 sections that instruct the department on exactly how to calculate the fire and police aid available for apportionment. So this proposed amendment would add the similar clarifying language to those 2 sections. That's all I have today. I obviously would stand for questions if there are any.
Thank you, Jim, Mr. Jordan. Just looking here to see if there's any questions at the table, not seeing any, and I'm not seeing any digital hands either. I really appreciated that very thorough but succinct presentation, Mr. Jordan, and always getting us onto the right page and the right line. Next, we have members Dexter Wilson, also an attorney with Minnesota Department of Revenue. Mr. Wilson, welcome to the committee. Please introduce yourself for the record.
Chair Nelson, members of the committee, good morning. I'm Dexter Wilson. I'm an attorney with Department of Revenue supporting sales tax. I'll be going over the one sales tax proposal in Article 2. This is Section 2, beginning on page 5, line 27. This is a simple change. Minnesota is a member of streamlined sales tax. This proposal amends the definition of state for sales tax purposes to conform with the recently amended streamlined sales tax definition to include any territory of the United States. This is the end of Article 2. I'll pause for questions. Otherwise, I'll turn the bill over to Brittany McCormick to go over Article 3.
Any further comments, members? Not seeing any. Let's move to Ms. McCormick. Welcome to the committee. Introduce yourself for the record, please.
Good morning, Madam Chair, members of the committee. My name is Brittany McCormick, and I'm a staff attorney with the Minnesota Department of Revenue, working in property tax. Today, I'll provide an overview of Article 3 of the proposed amendments to the fire state aid and police state aid programs, and that begins on page 6, line 6.25. These aid programs provide funding to municipalities to pay for the pension programs of Minnesota's firefighters and police officers. While continued aid remains a critical part of ensuring the safety of Minnesota communities, the statutes that govern the application process for this aid are outdated and inefficient, creating unnecessary work for municipalities. In 2019, the legislature passed phase 1 of the department's proposed 2-phase recodification of the fire state aid and police state aid statutes. Chapter 69 previously housed both fire and police state aid statutes, plus a confusing mix of pension law and insurance law. Phase 1 of the recodification eliminated Chapter 69 and split fire state aid and police state aid into the 2 new chapters before you, 477B and 477C. In 2020, phase 2 of the recodification was introduced as part of the department's policy and technical bill and considered in the House Property Tax Committee. A tax bill did not pass that year, however, and the proposals were not reintroduced with the department's bill in 2021. Phase 2, the current proposal, is very similar to the 2020 version and would streamline the requirements for aid within chapters 477B and C. Broadly, the proposal updates filing requirements to include information the department needs to quickly determine eligibility and to calculate and distribute aid, while minimizing its current need to engage in frequent one-on-one communications with municipal administrators, hunting down necessary information. With these amendments, municipal administrators will know exactly what information is required, when it is required, and what consequences come from non-compliance. Clarity will make the program more efficient and distribute aid to all participating municipalities quickly and accurately, allowing the municipalities to focus on providing safety to their communities. These provisions were drafted with the assistance of the Office of the State Auditor, members of the Minnesota Fire Association Coalition, the Minnesota Police Chiefs Association, the Department of Public Safety, and a subject matter expert from the city of Mounds View. On a more detailed level, sections 1, 17 through 19, 21 and 22 provide deadlines and procedures where statute is currently silent. The language provides dates for the state auditor to file financial compliance reports with the department and appeal deadlines for municipalities to contest their apportionment of fire state aid or police state aid. The language also addresses how to correct clerical errors made in apportioning aid and how taxing districts and joint powers entities are to be paid. Several sections, sorry, I don't want my computer to restart. Several sections amend or add definitions to the fire state aid chapter 477B. Section 2 adds a definition of apportionment agreement, which is a form used by the department when multiple fire departments provide fire protection to the same municipality. Sections 3 through 6 update and create definitions regarding joint powers entities and fire protection special taxing districts, neither of which existed when the fire state aid statutes were last updated in the late 1960s. Section 14 updates the population and estimated market value definitions to reflect the most up-to-date and accurate information available. Section 7 through 9 amend the criteria for a municipality to receive fire state aid on behalf of the fire department. The qualification criteria is in current law does not reflect the operations of a 21st century fire department. The department worked with stakeholders to agree on new appropriate criteria for purposes of qualifying for fire state aid. These include requiring a fire department to have a fire department identification number and to be dispatched by a 911 service. Sections 10 to 12, 15, and 16 create filing and data usage requirements that ensure the department is using the most accurate, up-to-date, and relevant data to calculate fire state aid. For example, the amendments require that municipalities report the parameters of a fire department service area, information necessary to calculate fire state aid, but not currently required by statute. Sections 13 and 20, my colleague Jim Jordan just went over. And finally, section 23 eliminates outdated language no longer needed by the department. And I'm happy to answer any questions.
Thank you, Ms. McCormick. I do not see any questions here at the table, nor hands. It is interesting though, isn't it? How when we update or even just recodify or streamline, it's a lot of language, a lot of different sections. And I do appreciate though the work that's been done to try and streamline the work for firefighters. So they actually, so the aid is calculated certainly in a more straightforward way. Members, we have one more testifier. Let's do that and then we'll talk about the rest of the bill here. Next up is Mr. Nick. I'm going to try your last name, Nick. It's wonderful to read, maybe harder to pronounce. I would have Xanthophophus, but I'm going to Xantholius. Please, Mr. Nick, introduce yourself for the record and then continue.
Madam Chair, members of the committee, my name is Nick Smithopoulos. I'm a staff attorney at the Minnesota Department of Revenue. I believe my colleague, however, was going to cover the first section, section 1 of Article 4.
Yes.
So,
Ms. McCormick, thank you. Ms. McCormick.
Yes, thank you, Madam Chair. Sorry about the confusion. I will also be going over the first section of Article 4. So this section amends the definition section of the property tax refund chapter 290A. To qualify for a property tax refund, the claimant's home must have been classified as a homestead in the assessment year of the property taxes payable. This amendment clarifies that the homestead classification be completed or approved by December 31st of the assessment year, not December 15th. And this change reflects the change in the homestead application date from December 15th to December 31st, which was implemented last session. Thank you. I'm happy to answer any questions about that.
Thank you, Ms. McCormick. Seeing none, we will move back on to Mr. Nick. Mr. Nick.
good morning. I will cover section 2, which amends the State of Minnesota Property Tax Refund Act. Under current law, the Commissioner of Revenue can require owners and managing agents to e-file copies of certificates of rent paid or CRPs issued to renters. This section lets the department authenticate the identity of the owner or managing agent who submits a CRP to the department. The taxpayer identification number or TIN will not be on the CRP provided to the renter. Without this authority, the Commissioner of Revenue is unable to require the issuer's TIN. Revenue has consulted with the Minnesota Multi-Housing Association about this process. This section is effective for refund claims based on rent paid in 2022 and thereafter. And that concludes the policy and technical bill. Thank you.
Thank you, Mr. Nick. Any comments or questions? I don't see any at the table. And I don't see any online. I just want to ask a couple things just to ensure. I believe Ms. Bear certainly talked about this early on, but just to reiterate that this is non-controversial. There's no further or you're unaware of any unintended consequences or differences of opinion. And I do want, and also Ms. Bear, if you could explain how is it that you plan to make these changes known to tax filers or those impacted so that they can be aware of what we see here as, in some cases, more tax filing or simplicity in determining things like the fire state aid. How do you plan to get that to the stakeholders?
Madam Chair, members of the committee, those are really great questions. One of the things that we do at the department is we ensure that any new tax law that is passed, we post notifications on our website. We do outreach through our Gov delivery. We sometimes send, if there's a specific stakeholder we know happening, sometimes we will notify them by letters, things like that. So this will follow the process that we do for any new tax law that would come into effect.
Okay, thank you. And then I will say, I do recall when there was, when we were doing the PPP and some of those things where we were, the legislature was not going to tax. We were going to remove the taxation on things like PPP and UI. And I do want to commend the department for what I saw online as really good customer service. I did see the online notifications. I did sign up for those, so they came directly to my email as well. And I would encourage Minnesotans to do that, to get on the DOR website and sign up for those notifications. I do think that's an important way to make sure everyone is aware. So not seeing any further questions, we will be laying this bill over as amended. And I just will note it's technical clarifications. It does not change tax liability. And of course, there's no revenue impact at all. So with that, members, we will lay the bill over. And we have our next hearing, which is Tuesday, March 1. And before we move into March, I just want to mention to you the rest of the week here. It is a palindrome week. So if you line up the dates, 2/24/22, it is the same whether you're going forward or backwards. I know there's a lot of people on this committee that like numbers. So just take a note, enjoy the palindrome week we have here. I don't think it will happen for maybe another 100 years. So anyway, with that, our meeting is adjourned. Our next meeting is March 1. Thank you so much.